Before we continue, I'd like to thank Moomoo for sponsoring this video. Moomoo is a global investing platform and one of my personal stockbrokers. They were recognized as the #1 US stock trading platform for Canadians, and my favorite feature is that they have zero foreign exchange fees, which can save users a lot of money compared to other brokers that charge 1.5% each way when converting currencies. Another feature that I use is their free Level 2 market data, which is typically a paid feature with other brokerages, and it's especially valuable for active traders and people like me who always want to find the absolute best deal. With basic Level 1 market data, you have less price information and can end up paying more than necessary when buying a stock. I've also had a great experience with their 24/7 customer support. Whenever I needed help, I was able to connect with a live agent instantly, which is something I really appreciate from a brokerage platform. If you'd like to give Moomoo a try, they're currently running a limited time promotion until August 31st, and if you sign up through my link, you'll receive a 30-day commission-free card and 6% APY on idle funds. And when you deposit $1,000, you will receive 10 free stock draws. But if you deposit $8,000, you will receive 30 free stock draws. Each draw gives you a chance to receive shares of companies like Nvidia, Microsoft, Tesla, and more. Thanks again to Move for sponsoring today's video. Hey everyone, and welcome back to Leon's Money Flow. Today I'm joined by a very special guest, and I'm so honored because this is his first interview. And he runs a great channel with amazing content and analysis on different funds. So be sure to check that out. And without further ado, I want to introduce Oldfish to the channel.
Hi, hi everyone, I'm Oldfish. So thanks Leon for inviting me to the interview. Nice to meet you and nice to meet you all.
Yeah, for sure, for sure. All right, so Oldfish, why don't you tell us a bit about yourself, who you are, what you do, and basically your story and like how you got started investing.
Yeah, so actually my story isn't that complicated. I came to Canada like 8 years ago and then now I'm an immigrant. Um, and now I'm living in BC. I first came to Canada in Montreal. So I stayed there for my study and take my permanent resident, and then I moved to BC. Yeah, and because BC is a city that is so expensive, so I have to explore ways to diversify my income. So uh, that's why I started investing. Yeah, so that's basically it.
Yeah, and like you didn't have any prior knowledge in investing, right? So you like had to did you have to like learn everything by yourself, or do you have any support from people, or what did people around you like think about that?
That's a very interesting topic because almost no one will recommend investing around me. Yeah, because for Chinese, investing is such a high risk activity. If you take a look at the Chinese index, I mean the Shanghai Composite Index, it's not going up. The
Yeah.
long-term trend is not going up. So people they have to do swing trading.
Yeah.
So in the impression of most people, like investment, long-term investment is like putting the money uh, into the sea because I saw one of my relatives investing in one fund and they just put it there, forget about it, and 3 years later, uh, she lost like half of the half of it, half of the
Wow.
capital.
Yeah. So investing, it's not really preached in the Chinese community, you would say.
No, because the market is different.
Yeah, right. Yeah, I remember like when I was gonna open my own brokerage account, My mom was so skeptical and so concerned,
Yeah,
and yeah,
that makes sense. And that's but after I moved to BC and I feel a lot of stress. So that's and then I start to read and then try to find solutions um, to to my situation basically.
mm,
Yeah. So and then I explored the way to invest. Like almost every book mentioned like S&P 500. So and then I just basically I did my research and
yeah,
basically I just get to know what is index investing and why investing uh, is beneficial in the long term, and also check the historical data to validate whether it's true or not.
yeah. That's
So
good.
yeah, that's basically it.
That's very good advice. Like, yeah, index investing, like, um, because I remember, especially for me, just starting out, and also even now, sometimes I feel like, oh, maybe I have edge or I'm smarter than this fund manager or like other people, and I can pick stocks that can outperform the market, but I can't do that consistently if I even find a winner. Um, I think the statistic is like 9 out of 10 fund managers or active stock pickers don't like even beat the index in the long run, like
Yeah,
10,
true.
20 years, right? Like, yeah, you might beat it in like 1 to 3 years, but like in the long term, will you beat it every year consistently for 10, 20 years, right?
Yeah,
And you do want that consistent growth, especially for that the compounding effect to take in, right? Um, yeah,
yeah, that's why I like. I always like uh, the the funds that is based on index. That's the
yeah,
reason. Yeah,
yeah,
because the basically an index, it just keep the strongest company, and then
exactly.
it removes the weak, right?
Yeah,
Yeah,
that's the natural healing factor where every quarter index is rebalanced, and they take a look and they kick out the losers and they bring in fresh new potential
mm,
growers, right? So
yeah,
yeah,
yeah. I have to be honest because for me, I am not. I'm a very lazy person, so like investing in index, like it just saved me a lot of work because I otherwise I have to check on the funds holding like from period to period to make sure like everything is okay.
yeah,
Yeah,
yeah. It's much more passive and hands off. And like sometimes we think, oh, we're sometimes we're like greedy and we think we want more returns, but and we don't want to just take the average return of an index. But like what's the interesting thing is like these average results over the long term compounded produces above average returns, and that's pretty amazing that like just like accepting the average, you'll beat most people in the
yeah,
long run.
exactly.
Yeah, cool. So do you have a question for me?
Yeah, so how did you, because at your age you're as I know you're 25, right? So at your age, how did you start investing? Like did your family like just tell you something about investing, or it's just you just learned it by yourself?
Yeah, for sure. So there was basically three things that made me learn or like know about investing. One was it was in 2020, so it was COVID time, and it's during lockdown, and everyone, including me, wanted to learn how to make some extra money on the side. Another thing was it was that was when I started my first co-op job at Manulife. So I was getting like real big boy money or like actual consistent money coming in. And then third thing was, well, it wasn't really a catalyst. Well, like it's just funny story. Like my first the first time I learned about the word stocks is because my maybe when I was 6 or 7, my sister, who she was probably in high school, she had a project and she made a board game, and the board game was kind of like Monopoly, if you're familiar, where you go around the board and you collect money or you pay rent and you try not to get bankrupt. But basically, in that game, you're also able to buy stocks, and the stocks was basically a pretty in that game. It was pretty OP. It was pretty overpowered strategy. You like you bought the stock, and then every turn you would like get money, and base right. So yeah, that's just a funny story. That's my first time I heard the word stocks, I think. But the last catalyst or the last push that made me start investing was because, so as I mentioned, in 2020 I started the job at Manulife, and during that time there was also another co-op student who's a bit older than me, maybe like 2 3 years. Um, but he he was investing, and that was the time when Tesla was going crazy. It was going through the roof, like 10 like 20 30% gains every week, and multiple stock splits. Um, so it was very entertaining time because every day during our lunch breaks we would talk about investing and how the market's doing, and like, yeah, it was just so fun, and that's basically why when I started. And like I also watched a lot of videos on YouTube, and um like Brandon Beavis, or like I watch a lot of US influencers because at that time, or like even now, it's there's much more US financial creators than Canadians. And so that's partly why I created this channel. But um, basically, I learned how to invest through YouTube, through all those channels. And also, I always had that mindset that, like, oh, you can make money through money, because my mom was doing mutual funds for probably the last 20 years. And also, I just like watching interviews and videos on YouTube, and a lot of times I would see like interviews with billionaires by this channel called no School of Hard Knocks. And basically, whenever he interviews a billionaire, the billionaire always says like it's important to be an asset owner and not like just a consumer. You want to own like equity stocks or businesses. um, and yeah, basically don't just consume, learn to um, own own some
Yeah.
assets. So yeah, that's a my long convoluted answer, but basically all those things kind of led me down this direction. Yeah.
Yeah, so for me, it's basically the same thing. After I learned investing, because I tried investing, I also tried different ETFs like BDY, the dividend ETF, and but then I came across the Adriano's content about
Yeah.
PII, and then yeah, and then it's
Eye
so
opening.
so I
Yeah.
just tried out the passive income investing myself. You know, that's my starting point to invest those high yield fund.
So you started when you started investing, you were already investing in like these income funds?
No.
No.
At the first place, I was investing in VFE, SEQT, BDY,
Okay.
some funds like that. But you know the but the thing is, I don't feel secure like owning these funds. Um,
On
maybe it's not. I know it's growing, but there's no cash flow of it. Basically,
the growth funds you're
yeah,
talking about. Yeah.
yeah. So, um, it's just that the world is changing. The AI hits the job market very hard, and I don't feel secure. And I have to find a way um, to to have a secure net for my family. That's
Right.
why I try to start. That's why I try to invest in those high yield funds. Yeah, just to have enough passive income for my family.
Yeah, because yeah, there's always unprecedented events and
Yeah,
like things you can't control. You might be like if you count on your 9 to 5 or your job as your only source of income, that can be always taken away from you. Unfortunately, I think you had some story about um laid off your job or like leaving it, right?
yeah, yeah. Basically, I stopped working in March this year. Basically, I'm not technically I'm not laid off. Um, so my company was bought by another company. So that company started to lay off a lot of people. So
Mm,
another team just got laid off. It got cut completely. Like everyone is worrying about his job.
yeah.
And in the company there's no more new tasks anymore. So everyone they feel so depressed,
Mm,
and and it's just that my um in the late uh last year in December, my daughter was born. So I took the opportunity. So I took the paternity leave. So I just wanted a time to reconsider what is my uh, what is next for my life. Because if let's say if AI is going to uh, replace human, because in fact it reduces a lot of working opportunity, because uh, the AI is so powerful because you are a developer, you know what you can do, right?
yeah.
But a lot of company like they start doing layoff, and um, and they stop like hiring new people. Yeah, so as a developer, I'm not sure like if I can get a job like after the current one. Yep, but for my company, I'm pretty sure it will come to an end. So yeah, luckily I built up uh, an income portfolios
Yeah.
which can sustain like my living. So yeah,
Are you are you withdrawing or using any of your portfolio right now?
yes, yeah,
Yes. Okay.
yeah. But basically, I am collecting EI, so but it doesn't cover everything, right? So basically, I will withdraw a portion of my portfolio. Um, yeah, basically, I withdraw it directly from the margin account and let my uh, my distribution to pay off the debt. That's why.
Okay.
That's how I do it.
And so how much ballpark figure is are you like withdrawing off your margin to pay your expenses every month?
Yes, yeah, that's
Like
basically.
can you
How
give
much?
us like a ballpark figure of like how much?
It depends. It depends. Actually, like maybe 2,000. something
Okay.
2,000 to 3,000,
And
something
then
like that.
how much distributions do you get,
Uh,
now?
mm, Including my non-reg and TFSA and TFSA of my wife, we're getting like 5,000, around
Okay.
5,000
Oh,
in
that's
total.
good. Yeah, so you like do you think this first of all, do you think like the strategy or the income of these cover call funds is sustainable enough for you or for someone to live off of?
Um, I think it's pretty much sustainable, but we cannot predict the market, right? If there is black swan, probably the everything will experience a big pullback. Then the distribution just follow the NAV. So if the NAV decrease, probably there will be a decrease in distribution. So
Yeah.
it's hard to tell. It's basically it depends on the market condition. So what do you think of the income fund? Because I know you also invest in those funds.
Yeah, but I think the importance is so not all cover call funds are created equal. I think the importance is the cover call strategy and structure of the fund. So, like for example, like the Daymax series ETFs, that's pretty unique because you're getting full coverage of the underlying basically, and all the income or the options part where you're getting the income is on the leverage portion only. So that's pretty neat because you're basically like almost have like you're having your cake and eating it too. Um, you're getting best of both sides. Um, but like some funds where the cover call strategy maybe is too aggressive, maybe it's too high at 50%. You can see those struggle to catch up to its underlyings, especially if there's a dip or something. Um, and then it might not recover as quickly. And of course, there's like the yield max side on the US, right? Like they give all the upside away, and those structured those funds, the yields aren't probably as sustainable.
Yeah, so I'm a little bit curious because for me, I I will need the distribution to be sustainable, and in the meanwhile, also I would love to see the NAV of the fund to grow. That's that's my preference. Like, what about you?
Yeah,
What's
yeah, I like that too. That's why I don't know if you saw my one of my recent videos. It was like my ideal portfolio. It's like only just 5 funds, and it's the major cover call ones are like funds are HDIV and HYLD, and these funds like they've grown a lot as well as paid steady yield, steady distribution. Um, I their cover call strategy is very modest and it's not very high, like near 30%, near 33%. It's like hard to say because it's a fund of funds, and
yeah,
um, some funds right on 50%, like the H Max, like the Maximizer series, I believe. And like some funds, like the Day series, they don't write any cover calls on the underlying. So so it's kind of hard. The average is like a 33%, 30%, I would say. And so that's why that kind of testifies and shows how much it's been able to grow during the bull markets, during the bull market, and also recovery once there's a dip and then it goes back up.
yeah, I do like HYLD and HDIV a lot. those two funds, even though they're like active managed, like completely active managed, but they are outperforming the the S&P 500 and the TSX 60, right?
Yeah, yeah.
Yeah, that's amazing.
That's the important thing. It's like it's beating their underlines or beating their equivalent index,
Yeah,
and
the
like
total return is something that matters the most. And every time because I created the back testing tool, right? My website.
yes.
Well, every time I see the results, I just don't understand why people are so against cover call ETF. Yeah,
Yeah,
because they're doing great.
yeah. I'm not in these cover call funds just to say that I'm in cover call funds, but like I'm in HDIV and HYLD because HDIV has been one of the top, like, is outperforming. It's like just a great fund, right? So
Yeah, even though I like index funds, but for active actively managed funds that beats that beats out the index for consecutive years, I think the funds itself is just amazing.
yeah, yeah, for
Yeah,
sure.
you have to admit that, right?
Yeah, yeah, yeah. Hamilton is doing something right with those funds.
Yeah,
Yeah,
definitely.
yeah. All right. Well, speaking of funds, I was just pulling up your Blossom because I wanna go over some of your holdings and see what you have. Let me see how if I can share. You see it, right?
Yes, I'm able to see it.
Okay. So your holdings, your top ones. Okay, so it's the day series. So you're a big fan of the day series, Q day, S day, C day.
Yeah, yeah, because I think the day series are the only uh, ETFs that that beats the underlying assets completely. Yeah, because if you do a comparison with the Q day to the QMVP, S day to SMVP, and C day to CMVP, they beat the index. They beat the index. So because they are applying the 25% leverage,
Yeah,
maybe like if there's a pullback, there will be more pullback. So it's important that have they they do have like better return than the underlying, because we're having the 25% leverage and is having that leverage effect.
yeah, sure.
Yeah.
And yeah, so like what you said, so you're basically saying the cover calls is accretive or it's additive to the
Yeah.
fund.
I do think the zero DTE strategy, I think is this cover call strategy is very efficient,
It's very
so that
good.
you can create like extra return
Yeah,
to the it's a plus to the underlying assets.
nice,
So
nice.
yeah, that's why I'm holding it. And besides, they are all index based.
Yes,
Yeah, so that's why I like holding them,
yeah,
and also their yield is attractive.
yeah, for
Yeah,
sure. Yeah. Um, yeah. What? So Estee, I found like what index would you say it tracks? Because I find it it's very closely correlated with the Dow actually because Estee's SMVP is like holding like 25 or 35 like big US dividend aristocrats or basically
yeah,
dividend growers like these old companies like Coca-Cola or uh, Colgate or Caterpillar, and these are all big companies in the Dow. So I find that it tracks it pretty well, right?
yeah. So I think like SMVP, the holdings in SMVP and CMVP, they're big companies that earns money, and so they're able to pay off to pay the dividend to the investors. So they're pretty much more of a defensive role in my portfolio. So yeah.
Oopsies, we lost the screen share. Which is great. Let me get it back.
So basically, as MVP and CMVP, they track the companies that come consecutively. Sorry, they continuously grow their dividend.
Yes.
Yeah. So
Yeah, so it's like Caterpillar, Eli Lilly, Colgate, Target, and yeah, so on. So it's like big giant companies, ExxonMobil, McDonald's. Yeah,
so
great.
to me, S-Day is a little bit like the SHD in the US.
SCHD, the Charles Schwab.
Yeah.
Cool. Nice. All right, moving on. And then, so after the day series, you have HHIS.
Yeah. So because I need income, so that's why I added HHIS, and yeah, it's so popular, and the yield is so high. It's, this one it can be easily ignored.
Yes, you pull up the website because yeah, HHIS the nav is like going like crazy. I mean, not nav, the AUM.
Mm.
How much is it? It's 1.8 billion. Wow, that's like that's probably the highest out of all the funds I hold. Um, so yeah, but yeah, it's a just it's also in my portfolio. Yeah, as a to boost my yield basically. But I don't know. I might be trimming some more. I I will probably come out with a video on that. But basically, I'm not a fan of the stock selection because it's not index based, right?
Yeah, that's the main reason. Yeah.
Yeah, and
If I don't need that much of income, probably I would just put that position to the Q day. Actually,
yes, yeah, I like Q Day. Yeah, yeah, HHIS, cause so HHIS is like basically they're picking stocks, right? And from our conversation a bit earlier, like most fund managers don't beat the index over the long term, right? And this is a clear or like not clear, but like it's an example of that because they picked the winners of last year, and
yeah,
HHS did really well, but the winners of last year is not quite gonna be the winners of this year, and that's why we see some decrease in performance earlier this year.
exactly. So that's why it's important to hold an index.
Yes. Let me show you guys the breakdown. So yeah, it's basically this. Is it 20 funds still? Yeah. All right. Cool. Let's move on. I'm not sure. Okay. So next up is ZEQT. So this is the BMO All Equity Fund target yield.
Yeah,
So
yeah. So
you like this?
yeah, I like this fund a lot. Basically, it's simple, right? And it's well diversified. So one ETF, you're investing like thousands of stocks. So it's a good ETF to avoid systematic risk. So, and also the fee is low. Basically, it's just the same as ZQT. So if you like the ZQT all in one, this one is also, it's just the same with 6% withdrawal. Yeah.
Yeah. Can you refresh myself? What do you mean by systematic risk? Then
Yeah. So if you invest in a concentrated portfolio, um, it's possible that like one company or several companies that they're doing bad like recently, and then the fund will experience a pullback because of that. But those risks are not systematic. But if there's a black swan, like everything is dropping, that is systematic risk.
Hmm.
Yeah. Oh, sorry. Maybe I made a mistake. Sorry. So this one, you cannot prevent the systematic risk, but you can. Is so well diversified, so you don't have to like the single stock risk.
Yeah. So basically, you have multiple fail safes instead of just having one stock being the fail safe.
Yeah,
Um,
yeah, because
you
in
basically
those
have
funds,
thousands now.
they're having the indexes in it, and basically they're one ETF holding like thousands of funds, thousands of stocks.
Yeah.
Yeah, so as long as the economy is growing, this fund will grow.
Right. Okay. So moving on, we have Heiji. So I assume is this similar reason to why you have HHIS or
Yeah, it's a satellite position in my portfolio. Yeah, I think I need a bit of the global diversification, and I like Brompton. So yeah, so it's I think it worth trying this fund. Yeah, but so far it's doing good.
yeah, it's a Brompton's a good fund. They have a good team and they're known to not just put out and launch new funds. Like they back test it and make sure like oh there's a demand and there's also like it can perform well or perform decently. So yeah, it's one of the more conservative fund managers, I would say. And then you have bank.
Yeah, bank. Yeah, bank is such a I would say well balanced fund. Know the underlying asset is index. So the big six banks and the life code company,
Yes.
and so it's index based, and the cover call strategy keeps like 33% of the upside, and so it keeps most of the upside. So yeah, so I think for this one, the structure wise is well balanced.
Yes. Yeah. I like 33% coverage too. And then so basically 66% is of of the portfolios not capped. And then if you add the leverage, basically these funds, um, these leverage cover call funds will basically perform similar to the underlying.
Yeah, and also is from Evolve. So I think Evolve like it pays very consistent distribution.
Yeah,
Because
they have
also
never dropped a dividend or like lowered a distribution.
yeah,
Yeah.
this is also the one of the factors that I consider when I buy in this one.
Yeah. Okay, good. And then you have B Day. Oh, That's a new one. When
Yeah.
do you get that recently?
Yeah, I sold HBase, the Harvest one, and swapped to B-Day. Yeah, so I think B-Day it just has a better structure because it doesn't cap the upside of the Bitcoin holdings. They only write a call on the QQM portion.
Yes, right.
Yeah.
Leverage portion.
So as it contains a part of the QQM, I do think it will, if QQM is going to perform better, I think it will do better than the HBase, at
HBase.
least in the short term, in the recent term.
I see. Nice. All right, and then we have Utes. So that's also
Yeah,
from Evolve.
yeah, it's basically the same reason with holding bank, like caps 33%, and then yeah, index base, and yeah,
It also it tracks the index.
yeah, it's interesting index. That's why I prefer the old funds fund.
Oh, right. Yeah.
Yeah,
What's
but you know the problem of the new funds of Evolve. They gave up the index, and then they try to actively picking stuff.
like Biggie, for
Yeah,
example, right?
yeah,
Yeah. Yeah, and it's like same boat as HHIS picking stocks, but it's even the I would say the strategy is worse for me, or like I don't like it because it's more aggressive and it's
yeah.
running on 50% of the portfolio versus HHIS is closer to 33.
Yeah, it's a little bit too aggressive, but um, I would say it's rather the stock picking issue. Yeah, for especially for PK.
Yeah,
Yeah,
the stock the stock picking is so that's your biggest crutch with them is the stock picking. You don't like that.
yeah, and I don't know because when they launched, they set the yield, they target the yield very high, and just unluckily, if there was a um, market pullback right after the launch, and because you're 30% yield, and if the NAV dropped, you will soon rise to 40%. But
Yeah,
when a yield reaches 40%, and that becomes very dangerous because all distribution comes from the NAV.
yeah,
Yeah, if if it reaches 40%, um, it means your underlying has to grow 40% annually
right.
just just to keep the net just to
Yeah,
keep
yeah, or else like you're giving up 40%, almost half of the NAV or
yeah,
half of the fund
yeah,
in a
if you
year.
want to restore the NAV, and then you need the underlying assets to grow like maybe 50%, 60%. That's math. It's just math.
Yeah.
Yeah,
Right. Okay. And then and yeah. And then you have GLCL, so that's Global
yeah,
X gold
yeah,
miners.
yeah. Just add some exposure to gold.
Yeah.
Yeah,
Okay. And yeah, these are all smaller positions, so not that much.
not that much.
And then you have Orly from Evolve.
Yeah,
So this one is
it's also like bank uh use like it caps like 33% of upside space. So structure wise, I think it's solid.
yeah,
Yeah, that's
pulling it up.
how I see it.
dollar unhedged. I just want to confirm the strategy. Oh, it's 25%. Okay. Yeah, that's what I need to make sure.
Yeah.
Cool. Nice.
So I think it's just like ENCL. You know, a lot of people like ENCL, but I pick oily because Evolve tends to be tends to have more consistent distribution.
Yeah.
Yeah, because for me, I have to rely on the distribution to
live.
to live. So it means a lot to me.
Yeah, you like the consistent distributions. Nice. All right, let me go back. And then after this, you have some MSFH. So you have some single stock in H. So this is also in HHIS, or at least HHIS has the leverage version. This is not leverage, right?
Yeah, this one is not leverage. Basically, I got the unleveraged. I thought it was leverage. Sorry.
Oh, you
Yeah.
meant to
I messed it up.
you meant to get the leverage.
Yeah, I meant to get the leverage one.
Why you think you like Microsoft?
No, it's just I think it's maybe it's just I maybe it's just oversold.
Yeah, I also think it's probably undervalued right now because it's been under like dipping so much this
Yeah.
past year, right?
Yeah.
Cool. So next you have ZSTL. I'm not that familiar with this one. What's this? Oh,
It's the bond, so it's basically it's like the money market fund, so it doesn't fluctuate a lot. So
yes. I saw ZMMK here too. Money market fund from BMO. So
yeah,
these are like your cash proxy positions.
yes,
You're holding a lot of cash
yeah.
now.
You can see that I'm not doing the reinvestment. I'm not reinvesting all of the money, so I'm waiting for a better opportunity to buy the to buy shares at a lower price. I'm not sure it will the I'm not sure if I will have the opportunity or not, but it's yeah, it's just I'm betting on it.
Just to hedge your risk. Yeah.
Yeah. Yeah, that's another reason.
Yeah. Nice. And then this GRGD, I assume that looks like a single stock that you just had a long
Yeah,
time ago, right?
it's very small position because this is a stock that recommended by one of my friend.
Yeah. So it's probably an old pick or something. And then you have HBT. So I like this one. It's pretty cool because it's diversified ish. Like it has a few companies and it's a lot of AI related stuff now, especially with the uh crypto miners turned into like data center. What's it called? Like renting the GPUs and whatnot.
Yeah, so this one to me is it's like a leverage version of Bitcoin to me.
Yeah.
Yeah. So just small position.
Yeah,
Yeah.
small one. All right.
It's like an lottery for me.
And then the last two, you have Class A. So that's from Brompton,
Yeah, so
probably building it up now,
I
or
will probably I will buy it slowly, like gradually. I wouldn't put like I won't buy in I won't buy in like a great amount of it. I will buy in like from like gradually.
yeah. And last one, some Ethereum,
Yeah,
another crypto.
just it's just forget this whole thing. It's
Yeah.
just $1. So
Oh, wow. Okay, nice. That $1 you wanted to make you a millionaire.
um, no, it's just that there was a period that was imposed. There was the like $5 bonus if you put money
Oh,
into.
crypto account. Yeah,
Yeah,
yeah. I've had those too. So basically, they're promoting the crypto accounts, and if you open and put any amount of money, like $1, you'll get free
yeah.
$8 or something. I don't know. Yeah. So okay, that's your portfolio. Looks pretty good. Um, do you have any future plans or changes you want to make in yeah, in the future, or the
Mm,
time's right?
so far my portfolio is doing good. Like it's not mm, although it's not super high growth, but I think it's pretty well diversified. So I is having like 70% uh 70% return this year so far. So I think it's doing quite good.
You had a 17% return.
Yeah, so far this year.
Okay, cool. Yeah, I heard 70.
No, 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 sorry about that. 20 is
Yeah, well, that's cool. Yeah, it's very good. I think that's all my questions that I had for you, or that I had planned. Do you have anything else you want to talk about? Oh, I guess. Well, first, yeah. Do you have anything?
mm, mm, no, not specifically. So yeah,
Yeah, you're good.
what
All right. Well,
about good.
so I just wanted to end off by asking. So, if someone's just uh, getting started with investing, what kind of advice would you would you give them to keep going? And yeah,
Mm, I think it's important to try out, to make your first step, no matter like how small the amount that is. Yeah, get started and then um, try to know more as it goes.
yeah,
But the first step is always the most important.
yeah,
Yeah, uh, because I always tell the people around me, oh, maybe oh, we should start to invest because and then no one listened. Well, maybe they listen and just they don't take action. So I think the first step is pretty important to
to
me.
try. Yeah,
Yeah.
you miss 100% of the shots you don't take. So always try, give it a shot, and like um, I guess your friends, right? That don't listen. I guess there's another saying. It's like you can lead a horse to water, but you can't make it drink. But at least you got your channel and you're showing people how to drink water, in a
I
sense.
wouldn't actually how because how I see things is that if we experience the COVID period, the government printed a lot of money, and then
Yeah,
our money, the money in our hands, depreciates depreciated a lot, and then I don't really want to experience that again.
yeah,
So that's why I started to invest, and then um, it's just that the people, they don't care about this. Maybe they know what is happening, maybe they don't. But for me is now I do think like start investing and preserve the value of the money I have.
Yes.
That's really important because that is basically how the world is running, right?
Yeah. Money. Right. And like, for other thing is like, so you created your channel. What made you do that?
Mm, actually, I always wanted mm, to to make YouTube videos. I
Yeah.
did try it out other channels, and I also tried by talking about the income funds in Chinese, which is my mother language.
Mm,
And the thing is that when I do the recording, I it took me so long to do the recording because I'm such bad. I'm so bad at doing presentation. You know, I wrote the script and then I read it. It's so hard to read it like fluently and confident.
yeah. Yeah, I get that feeling as well. Like, I'm not a good presenter. I'm not a good talker. It takes me like a day to film, edit, and make thumbnail for my
You know,
videos.
for me, it took me like a week to want to do a single video. That's this it just I and then I just gave up. And
Yeah.
but I I do want to make videos because I wanted my voice to be heard. And so basically there were only two options. Okay, so uh don't do it. Just give up. And the second one is maybe you could like use to start to make videos to begin like this. So what would you pick, right? Um, I would I would rather like mm, maybe doing some videos first, and then rather than giving up.
Yeah. Yeah, that's
Because
good.
basically, if we really want to do something, mm, I know I'm not good at like talking in front of the camera, but um, somehow I can get myself started.
Yeah.
Yeah, I know people will hate AI generated voice, so I'm more focused on the content. Yeah,
Yeah.
just
Well,
yeah,
you
that's a compromise. Because sometimes if you don't use AI, if you don't use AI, you give up. So what will you choose?
right. Yeah. It's great that at least you did get started and
Yeah,
you found a way to make it work for you. And I speak on probably a lot of people were really appreciative of your content and your videos, and we're glad that you make videos anyway, AI or in person or whatever you choose. We'll support it.
yeah. Is also I think is yeah, I feel happy if I if I feel happy I will feel happy if my videos actually help people.
Impact.
Yeah,
Yeah.
because for me, doing the research of those funds is just because I invest in those funds and I really want to know the product.
Yeah.
And so that's so I think it's beneficial for me and maybe if this for other people to let other people get to know the fund they invest.
Yeah. So yeah, that's good. You do a lot of research and it's very appreciative. You're one of the smartest
Yeah,
creators
of
in this
course
space.
I'm not expert. It's just yeah, trying to look into the funds and yeah, share my opinions. Yeah.
Yeah. All right. Well, thank you. Thank you so much for taking time to come on my channel and have this talk. It was very good, and I'm pretty sure both our my viewers and your viewers will really enjoy this. Um, and who knows, maybe we can do an update or something like this again in the future sometime.
Yeah, definitely. Well, once again, so thank you, Leon, for inviting me to the interview. Yeah, nice meeting you, and
Yeah, it was nice to
talk
meet
to you.
you. All right. Take care. See ya.
Nice to see you.